Hi guys! Welcome back to Millennial Fire, where we give you guys practical tips to reach financial independence and early retirement. So, it's tax season, and I know a lot of us are looking forward to getting back tax returns, while a lot of us are hoping not to have to pay Uncle Sam too much money. I'm really hoping not to have to pay Uncle Sam too much money this year. But with that being said, we find it very important for everyone that's on a financial independence journey to have general knowledge of how taxes work. The reason being is because no matter where you are in your financial independence journey, whether you're at the beginning or you're at the very end, taxes are always going to be a factor. So in today's video, we're going to debunk 7 tax myths that may have a major effect on your financial independence journey. And if you've been enjoying our content so far, we ask you just to hit the like button below because that really helps us out. So before we dive in, we just want to give a disclaimer that we are not tax professionals. This is just information that we feel that it's important for you to know, but everyone's unique tax situation is different. So if you have any specific questions, please go do research on your own or consult a tax professional.
Tax myth number 1 is that your tax refund is Uncle Sam's gift to you. It is most certainly not. It is your money. This is money that you've paid over on taxes throughout the year that at the end of the year, the government has to give back to you, which is why it's called a refund. But when you think about it on the road to financial independence, think about all the money that you could have lost by the whole year. Every paycheck, you're giving government a little bit too much money. That's at the end of the year money that you're going to get returned. Inflation has happened in a year. Interest, they're not giving you interest back on your money. And if you had any credit card bills that you were waiting for your tax refund to pay off, think about all that interest that you paid on that credit card throughout the year. You're losing money in so many different ways. And so definitely keep that in mind.
So myth number 2 is that your income always falls into one tax bracket when it's being taxed. This is not the case, but it takes a little bit of breaking down to get an understanding of how this works. So if you guys look at the screen, you'll see that there's the 2019 tax brackets, and there's 3 columns. We got the rate, we got single filers, and then we have the married filers. And so the rate is the percentage that the money is taxed at when it falls into that bucket. The single filers is if you're not married. The married filers is if you are married.
And you're filing together.
And you're filing together. Because you can't be married and file individually. If you look at, let's say, a single filer that makes $40,000 a year, you see that this falls under a tax rate of 22%. A lot of people think that the entire $40,000 that person makes will be taxed at 22%, but that's not the case. It's only the amount that's above the $39,476 that would be taxed at that amount. And so in that case, this person will be taxed on $524 at 22%, and then the rest of his money would fall into either the 12% or the 10% tax bracket. So all of the taxes aren't calculated off of one grand bracket. It's all the brackets that fall at your highest rate and below it as well. And so we just wanted to debunk this because we've heard conversations like, oh, well, the more money I make, the more I'm going to be taxed on my money. I'm going to make less money because I'm going to be taxed more. This isn't necessarily the case. But now that you know this, you can actually go through, look at the brackets, see where your income falls, and see exactly how much is being taken out for your taxes. So myth number 3 isn't necessarily a myth for everybody, but it was definitely something I believed, that your employer is always responsible for withholding your taxes throughout the year. So this is the case for you if you are a W-4 employee, but if you're a W-9 employee, I'm a musician, and so I played a lot of gigs, and I was a W-9 employee and got a 1099 and all of that. And before I was a musician, I had a full-time job being a W-4 employee, and my taxes was taken out. So I was just like, oh, I'm making all this money as a musician. I'm going to be fine at the end of the year. It's going to be the same situation. It was not the same situation at all. So through that, I learned that when you're a W-9 employee, it's your responsibility to take out those taxes throughout the year so you can be prepared to pay on those taxes. But of course, being a W-9 employee, you get the benefits of having write-offs and things like that to offset those balances. But we'll get into that in a future video.
So myth number 4 is that a tax preparer always saves you money. This may not actually always be the case. I actually did a little bit of a let's say experiment last year, because we did pay a CPA to do our taxes last year, because we had businesses and we had real estate. It was our first time actually making rental income, so we kind of needed some advice on exactly what was the right thing to do. So we consulted with a tax professional, which is what we advise everyone to do in their different tax situations. And so we, after having the consultation, getting all the advice that we got from them, we decided to go and do the taxes with them. Prior to this year, we had mostly done our taxes through TurboTax. And so I decided to kind of just lazily fill out TurboTax with all the information that I gave the accountant in order to file our taxes. And the amount that we owed, because unfortunately we don't, well, fortunately, unfortunately, you could look at it either way, but we don't get money back on our taxes. And so the amount that we owed, according to TurboTax, was almost exactly the same as the amount owed according to the CPA's filing report. And so we actually ended up losing a little bit of money because it was a pretty hefty bill that we had to pay the accountant to do to do our tax filing.
And a tip that I would honestly give with that is that TurboTax, at the time of this recording, has a free option. And so if something is free and it's a benefit to your financial independence future, why not use it? So even if you decide to go with a tax preparer to have your taxes done, just enter your taxes into TurboTax first, just to see what things are looking like for you. You learn things that that you may have never known, because TurboTax is so great at walking you through every step of your tax return. Or your tax filing, sorry. But that's definitely something we recommend, going through TurboTax before settling on a CPA or a tax preparer. So this is actually a great segue into myth number 5. A tax preparer is responsible for mistakes on your tax filing. And this isn't a personal experience one, but this is what we gained from our research, that if there's mistakes on your tax return, your tax filing, that your tax preparer is only liable in very specific situations. Outside of that, the tax preparer will send you what they're planning to file, and it's up to you to go through and verify that everything is correct. And so with that being said, we find it, once again, very important that you're aware of the information. We're not saying you have to be tax gurus or tax professionals, but at least know the basics so you can go through your filing to make sure that everything's okay, because we definitely don't want the IRS auditing us for any reason, because that brings unnecessary headaches and road bumps in our financial independence journey. So this leads us to tax myth number 6, that all tax preparers are qualified to do your taxes. So actually I had quite a bit of fun researching this one, and I was actually surprised how easy it is to become a legal tax preparer by the IRS's guidelines. So to become a tax preparer legally, to be able to do someone's taxes in this country for compensation, it takes 15 minutes of filling out a form that includes submitting your social security number, information from your prior year's tax return, and even if you look here, the IRS government site says that this takes 15 minutes to do. After this 15 minutes, you will be a tax preparer. So with that, you see a lot of tax shops popping up around the time of tax returns. You see a lot of signs in the ground, but realize that some of these people, not all of them, because there's great tax preparers out there, but some of these people are less qualified than you are, because you're watching this video and you've taken time to look into your tax information. So whoever you choose to be your tax preparer, make sure you do some research on them, get reviews, and see if they're actually qualified and if they actually know what they're talking about. So the tax preparer that I was referring to that you can become in 15 minutes on the IRS.gov site is a tax preparer that gets a PTIN number. And this number allows you to be able to do taxes in this country for compensation. I was honestly going to do it myself. I actually started doing it, but then I saw that you have to say that you're doing it for the purposes of receiving compensation for doing taxes, which I'm not. I was going to do it for the purposes of this video because we love you guys, but I can't lie. So I didn't actually go through with completing the process. But outside of those people, you also have attorneys that do taxes. You have CPAs that do taxes. And so there's a wide array of people, licensed people, unlicensed people that do taxes. And so look into what you feel like works best for your situation.
Get a free consultation with an accountant, a CPA, kind of figure out, a lot of them will be honest with you to see if the price that a tax professional that is an accountant or CPA, the price that they actually charge to do taxes, they might actually be honest with you, let you know your situation might not be worth the amount that you'll have to pay them.
And we actually had that happen in our situation. Of course, we're always trying to do what's best for our financial independence journey. So one year we actually did call around and look for small business tax preparers and found a CPA that was really honest with us, gave us tips and advice, and literally told us, hey, you guys haven't made the amount of money in your business yet that justifies paying the amount of money that it would cost for us to do your taxes. So you can do it on your own. You can go through TurboTax and come back to us. We'll gladly do your taxes once you make this amount of money, but we don't want to lose you money. Find people on your team like that you can trust, that's looking out for not only their best interest, but also your best interest.
The seventh myth is one that probably sounds pretty self-explanatory, but we just wanted to throw that in there for those that may not realize that. Filing taxes is voluntary. This is not the case. As long as you live in America and you make money, just get the idea in your head that you probably need to file taxes. There are special cases in which you don't have to pay taxes, and we do have a link of a site where there's a questionnaire that you can go through on the IRS's site that can tell you whether or not you have to pay taxes. And even if you're a student, it still might be in your benefit to file taxes because you may actually get a refund from withholdings that your job has taken from you that you didn't need to pay because you're a student. And so definitely check the website out. Filing taxes is not voluntary. If you make money, you have to file taxes to make sure you don't owe Uncle Sam anything and Uncle Sam doesn't owe you anything.
Thank you so much for sitting in. If you do enjoy this content, we're asking you that you please hit that little thumbs up button. That really helps us out, and it helps us get this message out to the people that really need it. And if you want to know when we're dropping new content, hit the subscribe button as well and the notification bell. And every time we post to YouTube will let you know. But other than that, thank you guys so much for tuning in, and happy tax season.
Happy tax season.